Hey everyone, Cecile here, money coach for female coaches, consultants, and industry experts who wants to scale the business fast without having to spend more time working in business. So today we're going to talk about how do you predict cash flow gaps in your business. This came about that from one of the videos that I published, and from this question that came up from Jesse Farm. If you're here and watching this video, and this I'm answering this question for you. So this is all about the your question about you work with big clients, global clients, and I know that they work on a 90 days payment terms, and you have your suppliers to deal with to pay them on time. And they are small suppliers. That means that they need to be paid like in 30 days from the date of invoice, but you only get paid in 90 days time. So you have this gap between what you need to pay in 30 days time versus what you get paid from your client in the 90 days time. So how do we predict the gap that between these 30 days and 90 days, and what do you do with that? So this is where you just see that if you're watching this video, then great. And if not, then I'll put a link in the question that you've asked in that thread, and so that is easier for you to find it out. And if you know someone that you should be in here, that we talk about cash flow on Friday at 4 p.m. GMT, that do invite your friends. I would love to have a chat and talk about cash flow with the guys. We know from the stats from score.org that 82% of businesses in the world, they fail because of poor management of cash flow. It's not because of lack of sales, and it's not because of lack of profit. Somewhere along the line, somehow they mismanage the finances and they mismanage the cash flow, and they end up getting bankrupt. So this is the place that where you can get to be on other side by getting on top of cash flow, getting grip on your cash flow. So if you have friends that who needs to be in here, do invite them to this having this conversation, and I'm more than happy to answer every single question that I've been asked to answer them one by one. So this is for you, Jesse. So what you can do, and here are some suggestions for you. So there is no point in arguing or trying to talk to the global players to get them to pay you in 30 days time. And it's very unlikely that will happen unless you've been working for years and years, and then it still doesn't work. Because some of my marketing agency clients, and they work with the biggest brands in the world, and they get paid like in 90 days time as well. So and they have something that you can do for them. So first thing that what I'll talk about is the Invoice Factory. So how it works is that because you work with global clients, so there's that invoice and they give you a purchase order value. That means that you already have that purchase order that given to you by a client. You're just giving them an invoice in return, so that you can sell that as you can do invoice factoring. So you get paid upfront from the moment that you raise invoice, and you get paid like 85%, 90%, 95%, depending on the factoring company that you choose. Now you have the cash flow that you must need it right now, and they're going to collect the cash flow from your client in 90 days time, and what they keep is that margin. So that's one option for you. The second thing that you can do is you can just simply talk to your suppliers in terms of the how you set up your payment structure with them. You can be open up front to say that, okay, from your invoice, then I can pay you 50% now and 50% balance on what I get paid from my client. And it's good to have this clarity, be open about it, and listen from their point of view as well. And they would rather have regular income coming in future months rather than just trying to get all money in as is due. Yes, they need to be paid on time, but if you have a conversation well in advance before you even start doing the work, then you might strike a deal that will work for you. But I think what and the third thing that you can do is what I call you diversify your client base that you work with. Is you no longer rely on your global brands to work with who works on 90 days terms, but you work with small businesses as well. They work on 30 days term as well, and that will keep your cash flow going in your business. And you can use that funds to pay your suppliers, to your operators who have been working on the project of your global brand project. And then when you get the cash in from your global, when they pay the invoice, then you have the cash and that's yours. And fourth thing that you can do is you can just bring in angel investor in your business, because you're building a business. So when you're growing a business, that you need cash, you need to return, you need to invest in certain areas. Maybe it's hiring more people. Maybe it's the marketing spend. Having a person who can liaise between what happens in operation versus the finance. And it could be anything. That what is your bottleneck? You need to look in that area that you need to want to invest, and maybe it's a time for you to get an angel investor in the business, so that you can show that the business is profitable. All they care about is that when I'm going to get my money back, and when, and is it I'm going to get my return on investment or not. So that might be an option for you. So I've given you like 4 options that you could or you could try it on, and then reduce the gap between that you're going to have between the 30 days time that you need to pay your suppliers to the 90 days that you get paid from your clients. So I hope that answers your question. And if you have some more question on this, then and if you have add-on question on this, then please do ask, and I'm more than happy to answer this as well. So that's the answer for you, Jesse. And coming back to this predicting cash flow gaps, and it is one of the crucial learnings that you need to make as an entrepreneur, as a business owner. That remember, we don't go out of the business because of lack of profit or lack of sales in the business. We go out of business because of lack of cash flow in the business. We can't invest in the business because of lack of cash flow in the business. It's not lack of profit. So you need to be really, really careful on how do you start predicting cash flow gaps in the business. It comes by way of producing what I call your mark sheet in the business, how you're performing in terms of cash flow statement. That gives you like the mark sheet, like how well you've been performing from a cash flow wise in the business. So you prepare your cash flow statement every month, and you can start to see the patterns of what happens in the business on a month-by-month basis. Is cash inflow and cash outflow separated into 2 or 3 headings, like direct cost paid and fixed cost paid, and then the taxes all paid. So you start to see like what is your net cash balance every single month. Is it increasing or is it decreasing? If it's increasing, by how much as compared to the previous month? If it's decreasing, by how much compared to previous months? Once you start to have this pattern of what's happening or what's happening in the business, then you start to have more clarity on what's predicting what's going to happen in the next 3 months today. And that is really, really powerful. And because that will start to give so much clarity on your cash flow situation, and you can start predicting your cash flow gap in your business. And then you'll know that, oh, I'm going to have this revenue of this client coming in for the next 3 months, but they're not going to pay me for the next 60 days, but I need to pay this cost. And then starting cash forecasting, and this will have, and you start to have more clarity on your business, and you can start predicting your cash flow gaps. And then you start saying, oh, I might have, let's say it's 19th of February today, I have £5,000 in my bank account, but I'm not going to get any cash coming in for the next 11 days in February, but I need to pay 11,000 in terms of salaries for rent for the next month, and some for my own personal expenses, and I need let's say £10,000, and then you're short of £5,000 out, aren't you? So you start to, but you can only have this information when you have the information as brought up as up to date from the previous periods, and you start to see that the patterns of what has happened, and you start to see the spikes, the patterns in the previous period, and that you can link up to your commercial decision that is happening right now in your business, and you can relate to what's happening, what's predicting what's going to happen in the near future. And that's how you can start predicting cash flow in the business. So that's all I wanted to share with you today. And if you guys have any questions on this and around this topic area, then I'm more than happy to answer. I'm going to take this one. Okay, so it looks like that we don't have any questions for today. And but if you do have any questions, if you think of any question later on, please do drop the question and tag me, and I'll be more than happy to answer them. And the next time we do a live call, And if you're around, that would be great to have a conversation as well. And do invite your friends and others and co-workers and to this Friday at 4 p.m. GMT. This is the only place where you get all Casper and question answers live on spot. So to think of any question that you may have around cash flow, I'm more than happy to answer them right on call for you. So with that, and I wish you all health, wealth, and happiness in what you do. And I'll see you next week, same time, same place, and have a great weekend. Bye for now. Thank you, Mohit. Have a good value. Thanks. Thank you so much for tuning in, and see you next week. Bye for now.